what are we seeing here with this futures trader sentiment? And why do you use this particular sentiment gauge?
What this is, and I look at a lot of sentiment. We look at the investors' intelligence data. We're actually one of the inputs for them. This is our little variation on Jake Bernstein's daily sentiment index, or I don't know if you are aware of Jake. Jake's been around a long time. When I first started on the floor in the 1980s, the floor of the Chicago Mercantile Exchange, Jake was one of those 3 or 4 guys that everybody was following and subscribing to his newsletter. There's a lot of work with seasonality, a lot of work with sentiment. So this is just a slight variation on his data. So I want to give the credit to him. But what he does here is he has a daily survey of futures traders. And futures traders are near to intermediate term followers of the trend. So like anyone who follows the trend, you're wrong at the turns, right? Because you're too bullish on the tops and you're too bearish on the bottoms. So I look at this as one of those environmental indicators that tells me if the market's getting offsides again, right? There's that word again. But is the market getting too stretched out, either on the long side or the short side? So that bent green arrow on the bottom there, on the bottom panel, all the way to the right, that's showing that this survey is bouncing off of a least bullish extreme of only 17% bullish on the S&P 500, which is the chart that's up top. Now, if you're in a bear market, it could stay that way for a long time. You look right next to the bent arrow over to the left just a little bit, and you see it stay down there for some time. That's because we were in a major downtrend last year, and it remained there for some time. But in a more of a balanced market, especially in a bull market, if you're in a major uptrend and you get a chance to buy when it's at those least bullish extremes and it's offsides again, there's that word again, that tells me that now I need to start looking where support is on whatever I'm trading. And I need to start to look at our tactical tools, the A6 and the CPM, to tell me when it's time to pull the trigger. So that's the significance there, is when it was moving into that 17% bullish area, the S&P 500 was flirting with 4,200. So I had 2 of the 3 pieces that I needed to put a position on. The third one was when the market internals were strong enough that I can actually pull the trigger that day. And as I said, that was a few days ago, according to our own metrics.
Right. Now, I want to ask you about this area in 2020 and 2021, where this futures trader sentiment really seemed to poke above that 82%, or that red line. Is that at 82%? Is that what the red line is signifying, the dashed line?
Yeah, that was just basically me eyeballing that and looking back over, you're looking at 5 years of data. I'm looking back at probably 10 and trying to just kind of see where those parameters are.
So do you use this on the top side as well? Because it seems like, it really kind of nailed it in this most recent downturn where it got a little bit ahead of itself on the bullishness. But there was a lot of that extreme bullishness from 2020 through 2021. And the market was kind of still going up. But if you looked at growth or like ARK-K, that was certainly getting hit. So what do you make of that with the sentiment?
It's really good. I think that's a really good analogy to this is the markets generally go up. So it's more likely for them to be overbought than oversold. It's more likely for them to be at a most bullish extreme than a most bearish extreme because people like to be bullish. Overbought and oversold indicators. One of the first of many mistakes that I made early in my career was, in the 1980s, we didn't have computers on the floor. So I was doing stochastics, by hand after work, on my, in my apartment, on my kitchen table. And I thought, wow, every time the stochastic gets up to 82, I just have to sell it. Well, guess what? I sold it in the middle of a big bull market and I got run over. And that was a hard lesson to learn. So whenever you're looking at these type of indicators, the buys, the oversolds, let's call them, are usually more meaningful, just because I think a lot of that is because the market has an inherent bullish bias.
Yeah, and I also think and I agree with you definitely, John. It always seems like the oversold, the fear part, is a little bit more dependable because everyone seems to get fearful at the same time, but everyone kind of enters the market at different times, and then eventually everyone's like, "Oh my God, we're all making money," and then it gets greedy. But that greed can go on for a little bit longer.
Yes, if we were in an extended bear market, which you hardly ever see, right? If we were in an extended bear market and we had a move up to the most bullish, the red part that's on top, that would be a screaming sale if we were in a bear market. But the problem is you don't get a lot of bear markets. And during bear markets, you often don't get that large of a opportunity to sell into. So, this obviously works better as an opportunity to tell you when you should start looking for an opportunity to buy.